The question I get asked every single day is, what is the least amount of money I can get into a deal with, either on the long term, like DSCR side, or the short term bridge, fix and flip side. So I'll go over each of those and try to give you like how they apply. Okay. So for a DSCR loan, the lowest I'm aware of, so this is non-conventional, non-bank statement type financing, right? DSCR is just based on the property's ability to generate income and cover its expenses. So the mortgage, tax, insurance, if there's an HOA, right? So a DSCR loan, the minimum I've seen and the minimum that we do is 15% down. And that is, again, non-QM, non-conventional financing. If you go to a bank, you can obviously do lower on investment properties with FHA, multi-unit FHA, you can multi-unit VA, or 10% down. Conventional bank financing, it has lower certainly. But on the investment property side, 15% is the lowest that I'm aware of. And you got to have excellent credit. The property has to excellently cash flow, and it's got to be in like a good market. On the fix and flip side, so the short-term side, so if there's forced depreciation, meaning there's a rehab budget on the property, you can really get into those deals with no down payment. There are some lenders that'll take a non-experienced investor and give them 100% financing, but they'll cap the loan to ARV lower than most others because there's a lot more risk there. So, 65, 60 ARV, something like that, lenders will do that. If you're an experienced investor and you want 0% down, lenders are going to be more open to, like us, giving you higher leverage because you have a demonstrated track record of getting deals done. You'll still pay third-party costs like title, insurance, tax, whatever, but we can wrap in the cost of the loan and the cost of the project, finance that stuff, and then even in some cases defer your monthly payments so that everything is due on the back end. Obviously, there's a little more risk to do that, and therefore the cost is going to be higher. There are also some lenders out there in cases where, if let's say you were going to wholesale a deal or you're getting something at a deep discount and it's a arm's length transaction, some lenders will even take on the full thing because their exposure for the property value is still extremely low. Those cases are probably a lot more rare than the other options, but they do exist. So you should always do your research. You should always ask questions, and you should always present the deal accurately up front so that when you get an underwriting a week later, things don't blow up in your face. If you have any questions about this or want me to go into it further, give me a call above or leave a comment. See ya.